Hello everyone. In our previous lecture, we have learned about candlestick patterns. In today's lecture, we are going to see different kinds of chart patterns which are there. Also, we are going to look at a Dow theory. So let's begin. Yeah. So what does Dow theory explains? So generally, Dow theory try to attempts to identify the primary trends the market it is. The Dow theory is proposed by the Dow Jones, which says market doesn't go straight up or down. It generally follows three trends. Which are those three trends? Uptrend, downtrend, and sideways trend. So what happened in uptrend is, let's see the uptrend. No? So let's see the market here. It has made a low. From there, it went on to make a high. Now there is a pullback, but the market makes a higher low. And after this higher low, market again goes straight up. It goes up and makes higher high. Now again there is a pullback. It makes a higher low compared to this low. Now it again goes high, makes higher high, which is higher than this previous high. Now it comes and makes a low, but which is higher than this. So hence it is higher low. Again, it goes up, makes higher high, then there is a pullback, makes higher low, then goes up, higher high, then there is a pullback, which makes higher low. So in uptrend, the stocks follow high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. It keeps on following this pattern in uptrend. So let's see how it works in downtrend. So exactly reverse happen in downtrend. Market or stock has made a high, then it comes and makes a low, then it makes a lower high, comes down to make lower low. This low is lower than this, hence it is called lower low. Then it makes does a pullback and makes a lower high. Again it comes down to make lower low, then a pullback with a lower high, then lower low, lower high, lower low, lower high, lower low. So it keeps on following this pattern of high, low, lower high, lower low, lower high, lower low, till that downtrend is continued. Now let's look at the sideways trend. So what happens in the sideways trend? The market is generally follows a range and it remains in the range bound. No, it has see like here it has made high, then it has made a higher low, which is compared to higher than this low. Then instead of making higher high, it had made equal high and then came down to make a higher low. Again went on to make equal high rather than higher high. Now again here came down to make higher low, and from there instead of going up and making higher high, it has made a lower high. Now after lower high, it has made a lower low. This is lower compared to this size, hence it is lower low. Now again there was a pullback. It has made a lower high, and here we can say it has made a equal low or lower low. Now from there again there was a pullback. It has made a lower high. Now what we can expect after lower high, lower low, right? But instead of making lower low, it has made lower high, and from that lower high, it went on to make higher high. Now what we can expect after this higher high? A higher low, right? But instead of making higher low, it has made a lower low, then lower high, and after lower high, we are supposed to get a lower low, but instead of lower low, it has made a higher low, and then it is going up. So in generally in sideways trend, it does not follow either uptrend or downtrend. It generally toggles between the range, and keeps on toggling between higher high, higher low, and does not make a new high, neither makes a new low. No? Great. So now let's look at the different kinds of chart patterns which we have. No, as a we are going to use as a part of a technical analysis. So first chart pattern we are going to look at is a bullish reversal chart pattern. There are three chart patterns: bullish reversal pattern, bearish reversal chart pattern, and continuation pattern. So what happens in bullish reversal pattern? Let's see. So there are three bullish reversal patterns which are available. First is a double bottom or a fake breakdown. Second is an inverted head and shoulder. And third is a cup and handle. So what happens in double bottom? So there is a downtrend. We can see here there is a downtrend. Now stocks or indices makes what follows the Dow theory of a downtrend. It had made high, low, lower high, lower low, lower high, lower low, and then a lower high again, and now stocks comes at the same point of a first bottom. This was the first bottom, right? Now stock comes at the same level, equal level, hence it is called double bottom. And from this point, from this second bottom point, price start reversing, and now the trend which was earlier downtrend starts going into uptrend. So now the trend changes from downtrend to uptrend. Hence it is called bullish reversal pattern. You can see it has made lower high. Instead of making lower low, it has made higher high, higher low, and then higher high, higher low, higher high. So the stock was in downtrend, which converted to uptrend with the help of double bottom. So what are the targets in this? So generally, what is the difference between lower high and this second bottom? This difference is generally target of a double bottom. Hmm. So let's look at the second pattern. Let's look at some charts. So here we can see the Tesla from the high, it has made low, then lower high, lower low, lower high, lower low. So this was first bottom. Then it has made a lower high and again come down to make second bottom at the same point. At the same point. Then lower high. Here it had made higher low, and now it has started its upside journey from this river downward trend got reversed after this double bottom. Now it is going into uptrend. It is going into uptrend. Let's look at the some other chart. This is MSTR stock. Here also we can say the previous trend is down. It has made first bottom here, then a lower high, and second bottom here. And from this second bottom, price has started reversing. Now from here it can now trend has reversed from bearish or a downtrend to a uptrend. The second bullish reversal pattern which we have is inverted head and shoulder. So what happens in this? Market is in downtrend. Market is in downtrend. So it is following high, low, lower high, lower low, lower high, lower low pattern. It makes lower high, then it makes a lower low. Unlike in double bottom, it makes equal low, right? Here it makes the lower low, then a lower high or higher high, and then higher low. So this pattern, if we draw this trend line, looks like a head and shoulder. It's look like a this is shoulder, this is head, and this is another shoulder. Hence, it is called head and shoulder, but it is reverse, right? Hence, it is called reverse head and shoulder. So this is left shoulder, this is head, and this is right shoulder. So when this resistance line, which is also called as a neckline, when this breaks, it confirms that now stocks has reversed from bearish trend to a bullish trend. Now it will follow a bullish trend after this breakout. After there is a breakout of this resistance line, which is also called as a neckline. Targets in this case are generally the difference between this lower high to head. So this complete is generally the target. Let's see. The Meta has given the no inverted head and shoulder uh, in the previous previous days, wherein we can clearly see there is a left shoulder, there is a head, right shoulder, and when it has broken this resistance line or a neckline, it has given this difference between the no distance between the neckline and head. It has given exact that time, and it has moved up also. But we can see the trend was downtrend, and now here the trend got changed and stock moved to uptrend. So this is inverted head and shoulder for you. Now the third pattern is cup and handle pattern. And what happens in this pattern is market generally goes into long duration of consolidation. No, and when it breaks that consolidation, it gives a very rapid and very fast noise. And generally, targets are in the very high in this case, generally 3 to 5 times of the resistance line to this bottom. No, this is the generally targets of the cup and handle. So, cup and handle is generally used in the higher time frame, basically in weekly or monthly time frame. No, uh, in the lower time frame, it is not that useful. And here also we can see the sideways or a downtrend has changed to a uptrend. So this is bullish reversal pattern. Now let's look at the bearish reversal patterns. We have basically two bearish reversal patterns: double top or fake breakout and head and shoulder. Uh, so, like we have seen in double bottom, here what happens? The trend is in uptrend. The stock is in uptrend. Huh? It makes a first stop, then it comes down. There is a pullback. It makes higher low, and then it goes again up. Now, after higher low, higher low, it should make a higher high, right? But it makes equal or slightly higher high, no? Which is also called as a fake breakout. No. So on this, the second instance, it is called as a double top. This is the second top, hence it is called double top. Now, and if we get any reversal pattern here, candlestick pattern, we can know this confirms the double top. And what are the targets? The targets are the distance from this higher low to this resistance line. So we can see that trend of the stock was up. It was in uptrend, which now got changed to a downtrend, and it started following from this high to lower low, lower high, lower low, lower high. So trend from uptrend converted to downtrend. So let's look at the on a chart. So here the chart of triple q. Triple q was in uptrend for a while, and it was following high, higher low, higher high, higher low, higher high, higher low, higher high pattern of uptrend. It has made a first stop, then given a retracement or pullback. From there, it went on to make the second top, which is called double top. And after double top, it got reversed, and this uptrend got converted to a downtrend, a short down trend. So, what was the target? The first target was the distance between this lower high to this resistance point. It has given that target and given some extra target also. Now, let's look at the head and shoulder pattern. So head and shoulder pattern is the second bearish reversal pattern. What happens here? Stocks makes a left shoulder, a head, and a right shoulder. And after that, stocks goes on to follow the bearish trend. The stock was in uptrend previous to this pattern, and now the pattern has changed to from up to downtrend, and stocks follows the downtrending Dow theory. No? And this, the distance or the difference between the head, higher high, and this support line is our target. Hmm? So stock was in uptrend. After this pattern, when there is the clear breakdown of this support, only when there is a clear breakdown of the support, we can call this as a head and shoulder. And Now the stocks follows the bearish trend and no goes on to make gives the targets of this head and shoulder. Let's see on chart. Um, Here we can see in the Nifty chart, there was a head and shoulder. After the neckline got broken here, it had given the target of this head to support line distance. Here we can see. After that, there was a bounce, of course. Now it has retested and again it went down. So uptrend got changed to downtrend. Now stock started moving in a downtrend. So this was head and shoulder for you. Let's see head and shoulder in Cisco system. The stock was in uptrend, following the uptrending Dow theory of high, higher low, higher high, higher low. Now here we can see it had made a left shoulder. Then this is a head and this is right shoulder. When this support line got broken, we got the target of this distance between the head and support line. You can see now stock started following the downtrend. It went into downtrending from up. Let's see, Tesla. Though the Tesla is upside going stock, but for a shorter duration, it was in a downtrend, and that downtrend begin after this break of head and shoulder. So stock was in uptrend, no? And when it has broken this head and shoulder, it started, no, its downtrend journey. The trend got changed from up to down, and it started making, no, low, lower high, lower low, following that downtrend pattern. So pattern change from uptrend to a downtrend. Now let's see continuation pattern. So once the reversal has happened, for a stock to move in that direction, no, we generally have a continuation pattern. So what is a continuation pattern? The continuation pattern, we have only one pattern, which is flag and pole. So we generally call it bullish flag and pole and a bearish flag and pole. So let's look at how it looks. Hmm? So in flag and pole, what happens, market goes up, then there is a consolidation, market, and if you mark that consolidation, the sideways zone, which we have seen the sideways trend, that sideways trend is generally, makes the flag. Once it breaks, then we can get this, stocks moves in that direction, and we can, get these targets. The first target is a flag's width, then the second target is the pole width. These targets, we can get, and this keeps on following in case of bullish flag. In case of bullish flag and pole, as we can see, there are these are the poles and this is flag. Let's look at on the chart. Right, so this is meta platform. If you can mark this support resistance, see this is a flag and this is a pole for it, and it has given its target of a pole. Now again after pole, it went into a sideways to make a flag. And when it has broken that flag, it has given a good upside move. Of, no? Now let's look at the bearish flag and pole. It is similar to bullish flag and pole, but it is in the reverse direction. It is going downward, right? So we have a pole, then there is a lower high. If we join those, sideways action, we get a flag. And when that sideways range breaks, we get the targets of this flag and pole. Huh? Flag and pole. So generally, flag width is the first target and pole width is the second target. Let's look at the chart. So triple Q, we saw there was a double top. So after double top, the stock got changed from uptrend to downtrend. And for this downtrend to continue, there was this sideways flag. So this is flag and this is pole. And after it has broken this sideways flag, it has given the target of this pole. That's it. Thank you for today. Thanks for joining.